Okay, great to have Ayodeji Ebo, the head of retail investments at Chapel Hill, Denham, join us this Wednesday on Frontier Opening. By Ayodeji, thank you so much for coming through. Let's take you to the market.
Yeah,
we have a whole
thank you
lot
for
to
having
talk
me.
about within the Nigeria space and others. The market went up on Monday, came down the NGX on Tuesday by 12 basis points. The BRVM went up 30 basis points, holding the 167 level. The Egyptian market up by 0.5% after a lackluster Monday. The Nairobi Securities Exchange fell 1.29%. That's a very hard fall for the largest exchange east of the continent. And the JSE, with the rest of the emerging markets and developed markets on Tuesday, suffered 1.04%, but still holding the 67 level. Let's touch in with the East African corridor and big news coming through from the IMF. Warning on inflation says this will not be transitory, but likely to be persistent, and holds the 6% global GDP growth outlook for 2021, but revised 2022 upward from 4.4% to 4.9%, and asks central banks to cut accommodative monetary policies moving forward because of the specter of inflation. Centrum Investments in Kenya posted a 1.37 billion full-year loss, changes its dividend policy. Today, we're looking at the monetary policy meeting of the Kenya Central Bank, likely to hold at 7%. And very big news, an investment deal yesterday, £132 million by the UK government, having a handshake with President Uhuru Kenyatta of Kenya. This is one massive investment window, Ayodeji. If you look at it, it goes through a whole lot. The UK is also backing Nairobi's new International Financial Center, which is Kenya is planning to establish, just in the same way their neighbor, Rwanda, has put up the new Kigali International Financial Center. So it's a very big story out there. Let me start from the IMF's. Let's shoot that together first, Ayodeji. What's your take on this latest story from the IMF?
Okay. Yeah, so just a bit of the view I have on the IMF story. What IMF is focusing, it's a normal periodic review, and looking at what they are saying in terms of the need for central banks to cut accommodative policies. And I think that what they focus more is that to see how they can engender growth. They should be focused more on growth than more of adopting a restrictive policies.
Interesting, Ayodeji, when you look at the interest rate decisions moving forward. But again, quite a whole lot to look at Nigeria. Yesterday, we're looking at central bank. Let's see what the Kenya Central Bank will do today, later, by the way. Let's move on to West Africa. To check in with Nigeria, we have a whole lot of grounds to cover on this. When you look at the MPR, you look at the allegations about malpractices by the central bank governor against embassies, some DFI, some banks and PDCs, and a whole lot of stories happening there. News coming through overnight was that the central bank is diverting with immediate effect the FX sales of 20,000 per week to the BDC straight to the banks. That should come to about 200 million US dollars for immediate sales to those who want BTAs, PTAs, school fees, medicals, and all of that. Let's start from there first. Ayodeji, let's leave the numbers from UPDC for now.
Okay, so I think when you look at the allegations are very witty, and it came as a big surprise yesterday, and it was even the first time that the MPC will be discussing a major FX development, which I feel they should uphold this. Most FX decisions have been taken outside the MPC, and so based on these allegations. From the numbers the CBN quoted, about $110 million is being sold to the BDCs on a weekly basis, which would translate to about $5.2 billion. The CBN sees this as unsustainable and also has not been seeing much of the impact on the economy. And with the examinations that have been carried out, was based on what they discovered, it was obvious that there were a lot of diversion. So Nigerians were not even getting the dollars at the control rate, because they were supposed to they sell to them at CBN sells to them, I think, at 394, and we're supposed to sell at around 400 naira or less. But they've been selling to Nigerians around $500. So I think we may we expect to see an initial knee-jerk reaction at the parallel market segment because of the halt in the liquidity flow to that market. However, if the banks are able to properly implement, if they're able to set the way they were able to implement the remittances, um, the naira for dollar policy, if they are able to fast track and implement that, and the CBN supply significantly to the banks and to the high earning window, then we may see that pressure begin to reduce. We'd also expect that the banks will also try to review the limits on cards so that Nigerians, it reduces the dependence on black market for other transactions. So if they can increase that with the liquidity, FX liquidity flow into the banks, that will try to reduce it. But the major, another, or lastly, the major concern will be the ineligible lists. For instance, in investment, Eurobond, you can't get dollars for Eurobond from the bank. So it means you continue to depend on the unofficial market to fund your Eurobond transactions or dollar denominated transactions. So these are major concerns. So maybe after a while, maybe the CBN may want to review the list and see how they can, for them to reduce that continued huge dependence on the parallel market.
Well, in terms of where we are right now, let's talk a little bit about the allegations against some DFIs, embassies, and all that the central bank governor spoke about.
Yes, I think that the this it will be based on the examination that has been carried out by the central bank, and before they would have come out, they will have their evidence, and based on what the CBN governor said, that very soon they'll be writing to the embassies of these institutions so that they can also be cautioned. Yeah, so these are really very worrisome, but part of what would have also led to it is the shortage of liquidity and also the spread. For you to be able to discourage unethical issues, you need to close the spread to disincentivize people from round tripping, from going through unethical issues. So I'm not trying um, to support this unethical issues, but the best way to control it and reduce it is to take out the incentive that lure people to do that. So once you're able to once you're able to deal with that, then I think that it would really help clear and or gives a bit of comfort in the economy.
Okay. So, in the manner of speaking, DG, would you say that stoppage of FX sales to Bureau de Change, FX bureaus, which are licensed by the central bank, um, now effectively took them out of the entire FX market in the manner of speaking, or at least from the direct relationship with the central bank, aside monitoring and supervision, as it were. So where would the BDCs, where do they go? Where do they go from here? What's the horizon for the BDCs if this
Oh,
policy, new
okay, very
direction
interesting.
is not reversed as it was in 2016?
Yeah, very interesting question. And if you look at I think in 2020 or 2019, the total of about I think $14 billion was sold to the BDCs. So, but what we've seen this year alone, BDC have not, the CBN have sold less than $3 million to them. So there's also that on what we call autonomous sources that they also enjoy. So it means the dependence on CBN is also reducing. So it doesn't effectively take them totally out of the business. What it has also removed is just the cheap way of them just making um, abnormal profit. We could call that in economics, making abnormal profits. They will have to source for their dollars. They will have to work for their dollars and sell at whatever rate they be. So what CBN is just trying to do is it's like when we touch on the issue of subsidy, who are those that are benefiting? So you want to you discover that even those that were trying to sell to that, they should be benefiting. At what rate are people buying PTA from the BTCs? At what rate are they buying PTA? So it means that it's not achieving the intended purpose. So I think that was part of why this may be like an initial um, maybe restriction, but maybe over time, if CBN sees there's a way they can put control, they may, like what we saw in 2016, they may reactivate the sale of BDC of dollars to the BDCs. But there needs to be a major control because most of the Nigerians are not really benefiting. It just provides very cheap way of BDCs making money because when you calculate it on an average of $40,000 they receive in a week, or if it's $20,000, that's like 2 million naira income, and that was responsible for what the CBN said that the number of applications increased to about 500 in a month, and number of BDCs have increased to about 5,000. So it was it's also sending very negative signals to Nigerians that some people can just get a license and just make cheap um, profits at the expense of Nigerians.
I get your point. Quite a very valid analysis and breaking it down to the numbers you're doing here in terms of how it really works out. You just sit on $20, $20,000 from the central bank. You sell it at the street market. It all comes round. You're sitting on about 90 million naira profit every week. Don't need to do anything else. How
Yeah.
did you do you? So you just a slush money. Yeah,
Yes,
that's what it is, really. It's just a slush money
yes,
just floating around. If
yes,
we increase the
exactly.
number of our BDCs from about 5,000 to 6,000, so it looks like that is the only market because arbitraging has now become that way because the central bank is the big brother who has a cheaper dollar to sell. I take it to the market and make a big margin. I don't need to do anything in between. Now, look, if you look at the setup for the BDCs and you look at the setup for banks, the overhead cost for a BDC is relatively small because in terms of number of staff, in terms of number of wages and things like that, in terms of every other thing. So compared to banks, they're making quite a kill, by the way. But again, this is a whole lot of conversation that we'll be having moving forward. We really appreciate your thoughts on this. Let's touch with the Southern Africa because the good news is that the Aspen says that the Johnson and Johnson vaccines is on the way now to South Africa. We're looking at the first batch of the 400 million doses to Africa to be disbursed this week. That looks like a very interesting story. Inflation in Zimbabwe. IODG, you'll be talking a little bit about this. Zimbabwe was once the capital of the highest inflation on planet Earth. That has now changed. And they're looking at 56% inflation for the month of July, down sharply from 106% in the month of June. And even the central bank yesterday was talking about 25% inflation target by the end of the year. The whole unrest in South Africa will hurt the economy somewhat. That's according to the S&P. It's looking at about 0.75%. We have a couple of earnings from the Southern African market from the mining sector, Amplats, Kumba, iron ore, and the rest of them. Let's talk about inflation. The IMF is asking central banks around the world to keep an eye on inflation, which came yesterday to the latest World Economic Outlook. Here is Zimbabwe tightening its inflation from triple digits, high end. At a point, you're talking about 600% inflation, now to 56.
Yes, I think when we look at the story of Zimbabwe, was based on the economic policy which impacted on their currency, and as a result impacted on the price of goods and services. So I think there's been a lot of economic reforms that is the country is trying to put in place, and that has been reducing the rate at which inflation has been moving. Most times when we look at inflation, it's when you look at it based on how it's calculated, it's a year on year. So it means if the price of a good has increased by 1,000% in the prior year, and you are now comparing from this year to last year. If it's increased by about 10% alone, that doesn't. When you check it in 2 years, it means that it has increased by 1,010%. But if you are checking it just based on last year, it means it has increased by 10%. So on a year-on-year basis, it may look that is reducing, that means the rate at which it's increasing is reducing, and which is, yes, is positive for the country, but there still need to be a lot of reforms to increase available goods and services, also in terms of their currency, so, to appreciate, such that overall, when you're looking at it in the medium to long term, prices of goods are affordable.
Interesting to keep an eye on that as inflation, the IMF says inflation is going to be a bit most likely persistent. So even within the Nigeria space, with inflation trading somewhat lower within the last 2 months, we'll see what the July numbers give us when we move into the new month of August. Let's round it off from North Africa, Ayodeji, around some of the headlines, including the story around how much the Bank ABC is looking to buy the shares of Bloom Bank of Egypt. That story is coming through at 22, 23 Egyptian pounds in the local currency. The Maroc Telecom is renaming the chairman, Haizon Abdusalam Haizon, as the chairman, and of course Tunisia's National Agric Bank reporting NBI of 20.7% within the period. Ayodeji, the Tunisian political crisis is still there. The market yesterday went up despite that political issue. The Tunisian stock market climbed about 0.31% on the general index. What's your take about North Africa, generally speaking?
Okay, though I'm not I've not been following their stories that much, but I believe that in terms of advancements, so when you take Egypt, for instance, you take Tunisia, you would discover that in terms of economic reform, so they are like a major competitor to Nigeria in terms of investment. And when you also look at in terms of interest rates, for us to be able to easily compete with them, our interest rate must also come at a premium, because they have more favorable economic policies than Nigeria. So when you look at the issuances, most of their bond issuances, you see it comes at a lower rate and is often oversubscribed. So I think one thing for us for us to be able to compete favorably with them is we also need to look at our FX management. The ease of coming in and going out is really very important to us. So I would just say that there's a lot that we need to learn from the North Africans, and especially when you look at in terms of policy, ease of doing business, attracting investments, and these are very key things that would help us resolve our unemployment issues.
Interesting thoughts. Thank you so much, Ayodeji, for your thoughts on this morning. Thank you for being part of the show. Ayodeji Ebo, Head of Retail Investments at Chapel Hill, Denham. Wish you all the best. Have a great day and see you next time.
Yeah.
Thank you, everyone. Bye for now.
Nice day.